Are you ready for your insurance costs to skyrocket? Here's why construction prices have surged 30% in the last 3 years. What's up, guys? Tyson Dela Cruz here. Thank you so much for rocking with me. We're going to jump into this article with Yahoo Finance.
And now the fallout. America's homeowners facing a hefty price tag from climate costs, and now the fallout from severe weather risks may be spreading in the U.S. Yahoo Finance's senior columnist Rick Newman joins us now with more. Rick.
Hey guys, yeah, I've been looking into what is happening with homeowners insurance premiums. We know people have been getting walloped with huge increases in auto insurance costs, and something similar is happening with home insurance premiums now. And I think part of the surprise here is we expect this to happen in coastal areas and places that are exposed to extreme weather, the type that's familiar to us. But this is happening all across the country for a couple of reasons. Number one, weather is just getting more extreme, and extreme weather is getting more frequent, and that is happening everywhere. So, for example, in the upper Midwest, they've had a lot of hailstorms in recent years that have caused a lot of damage. So
in recent discussion, it was highlighted that the U.S. home insurance suffered significant losses of $15.2 billion in underwriting last year. This historic loss was primarily attributed to natural disasters and inflation, what this gentleman is about to speak about, and demographical shifts towards high-risk areas like Florida, for example. The frequency and intensity in which these disasters pose a significant challenge compound the pressure for the insurance market.
That is pushing prices up in states like Minnesota and Wisconsin. And the second thing that's going on here is because big national insurers, because they write insurance policies across a huge pool of buyers all across the country, to some extent they are offsetting super high costs in places where there are severe storms. Think Florida, California wildfires, Tornado Alley, things like that. Those are getting worse and they're getting more expensive. So they're having to raise prices in some other areas just to offset those costs. And if you think this is price gouging, not really, because
the presence of regulatory constraints, especially in states like California, complicate the scenario even further. These states delay pricing approvals necessary for insurers to adjust their rates in response to emerging risks like hurricanes and tornadoes. In situations potentially in these kind of unique markets, insurers struggles to maintain profitability under these type of restrictions. One of the crucial insights is the indispensable need for cooperations between insurers and regulators and other stakeholders to ensure the sustainability of insurance market, so that they have profitability. The goal is not only to preserve the company's profitability, but to keep insurance affordable for consumers, which it's kind of getting priced out at the moment. So it's kind of like a dual challenge climate.
Because when you look at the profit ratios or loss ratios of insurance companies, they have been losing money on insurance policies in 17 different states during the last 5 years. When you average it out, that's compared with just 7 states where they were losing money going back to the 2014 to 2018 timeframe. So this is becoming a bigger problem for insurers, and it doesn't matter if you believe in climate change or not. This is showing up on the bottom line of insurance companies, and they are either raising rates, reducing coverage, or getting out of markets altogether, and that's going to affect many, many Americans.
The increased cost in construction materials and labor, up over 30% over the last 3 years, have continued to raise stakes when it comes to insurance. When properties are damaged, the higher cost of materials and labor translates directly to higher expenditures for insurers, which turns pressure for them to raise insurance premiums. The economic strain has led to insurers to withdraw from some markets, just like that individual mentioned, where there's significant amount of weather and other conditions. This retreat could have long-term effects, not only on stakeholders, but insurance companies as well. To kind of, in my thoughts, to kind of address this issue effectively, it's recommended that insurencers and regulators work closely together to kind of balance the risk, to review risk management and profitability, and kind of tailor insurance plans and premiums based around individuals and geographical areas. So insurencers suffer big loss in the century of 2023. Given the kind of complexity of this particular scenario, U.S. home insurance market obviously has increased their prices just simply due to natural disasters, regulatory challenges, and mainly, to be honest, economic shifts. The need for kind of strategic adjustments in this industry, as well as practices and policies, need to be clearer than ever in order for the individual getting the insurance premium so they can actually see what they're looking at. This calls kind of for proactive approach rather than a reactive approach. Let me see what else we got. I would like to say that my personal premium has increased significantly over the last couple quarters because of the things that I mentioned earlier in this video. I'd love to get your thoughts and know, has your insurance premium gone up either in your home or car insurance? I'd love to know. Drop your comments down below. Other than that, guys, I'll catch you on the next one.